Hey, folks, welcome to Verified Investing Crypto Update. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, everyone's asking me if this latest pop-up in Bitcoin changes any of my views. And the beautiful thing about it is it changes nothing. And that's the bottom line here. Now, we're going to go into the charts. I'm going to show you exactly what I mean. We're going to talk about confirmation and lack thereof that we saw basically around that 30,000 level, and why the market in Bitcoin has surged here to the upside. So lots of interesting things to look at. But again, nothing really changes. If you remember, I've talked about how Bitcoin could go as high as 48 to 50,000 before it breaks down below 30,000. If it confirms below 30,000, then you're looking for downside to 24,400 and then around 18 to 19,000. All right, so let's get right into it right now and take a look at the charts, seeing exactly what we have. And basically what you can see here is Bitcoin had the big dump out from the head and shoulders. So here was a shoulder, head, shoulder. It dumped out all the way down to 30,000. That was a beautiful alert that I had given out for that collapse. Went right to target if you know how to calculate your head and shoulder targets. If you were at my webinar this weekend that I held, you know exactly how to calculate that and why it went to that exact price point. Since then, what have we done on Bitcoin? We've bounced up, we've come down, we've bounced up, we've come down, we've bounced up, we've come down, and now we're bouncing back up. Now, here's where it gets very, very important. And again, if you took my webinar this weekend or I taught the confirmation signal, you know exactly what I'm talking about. But look at the institutional games going on here. So you hit the 30,000 level, everyone was panicking, right? Then you came down and you got close. People started to panic again. Is Bitcoin going to break down? It didn't even touch 30,000. Then it pierced 30,000. Again, taking out stops, the amateurs stopping out because they thought it was going to break down, the traders going short there, and it ultimately got rallied up by the institutions taking their money. Now, again, every time something like this happens, the institutions have to go one step further to coax people into the wrong side of the trade. So here they got close, people panicked, right? Here they pierced it. Now, for sure, that was the next step besides the getting close, right? So getting close, piercing is the next step. And then here they closed it below 30,000, which again, stops got taken out. People said, oh, this for sure has to be the breakdown. Sure enough, it was another institutional game. We also saw Cathie Woods with Jack Dorsey and Elon Musk right at that same point, which was fascinating. It's always fascinating to me to watch how the news kind of goes right with the chart. So you had a potential where you closed below, which means that the next day, which turned out to be green, could have confirmed the breakdown. And this is where you get into confirmation, folks. And needless to say, I can't teach it here in this free video because obviously people just literally, 400 people just paid to learn this in just this past weekend. I've taught it to thousands prior. But the confirmation signal is something you watch on the day after a close above or below a major pivot point or trend line to know if it's a fake out or a breakout or a fake out or a breakdown. All right. And when I say fake out, I mean like literally the institutions have these algos set up so they can play games with you. All right. They're going to push you to your limit and then push it in the opposite direction, which actually makes perfect sense why they're pushing it up now, right? Because you're getting this push up where everyone's going insanely bullish, right? So we know Amazon is potentially thinking about taking payments via Bitcoin. We have Tesla today. In fact, that's part of, I think the move up in Bitcoin today is partially probably 75% because of Amazon's news of potentially taking Bitcoin payments. And then the other 25% is that Tesla has a conference call today for earnings, and people are really, really hoping that Elon Musk starts talking about Bitcoin and maybe talking about taking Bitcoin payments as well. But the bottom line is, has anything changed? I mean, look at the range, even just since May that you've been in, right? So the low at 30,000 and the high right here. Put a trend line through this pivot high, and look at where we are, which is basically 40 to 41,000, right? That's the high. That's that trend line. We're below that at 38,900 and change right now. Now, I want to be clear. It would not shock me to see it go up. I've been saying this. So generally when you have a head and shoulders pattern here, all right, especially when a gap is created, see this gap right here, it's very likely that you do a retrace to what we call the scene of the crime. Now, it's not guaranteed. Remember, everything I talk about is all in probabilities, right? So when I'm talking about the likely outcome of Bitcoin, it's in probabilities, which means even if it's an 80% probability, there's still 20% chance it doesn't happen, right? I mean, you have to be pretty dumb not to understand probability. So I'm assuming everyone can grasp that concept. But again, if we get above this line here of around 40 to 41,000, it opens the door to filling the gap, which is right underneath 50,000, or we'll call it 50,000. All right, so that's what I'm thinking is a possibility, but you have to first take out this first level at 40 to 41,000. When we talk about charts and probabilities, there are levels that need to be broken. So right now, this is your respected resistance at 40 to 41,000. If you break through that, the probabilities dictate a move to around 50,000. All right, if you don't break through it, well, then there's still a chance that it could come back down here. Now, if it comes back to the 30,000 level, what you're looking for is you're looking for a break below, a close below, and then a confirmation signal. Confirmation signals, by definition, cannot happen the day that you close below the line. You have to wait for at least the next day. The reason that's the case is because, and I'm going to explain this in the simplest terms possible without giving away what the confirmation signal is that it's very unlikely that an institution is going to allow something to close below and then have another day close below that and then still be playing a game. Institutions don't want to risk being in, basically risking that amount of time in a trade, flushing it below when they're looking to push it up. There's too much risk for error, meaning that there's too much risk that other big players come in and start selling because it's now been below the line for 2 consecutive or 3 consecutive days. So this is what you have to understand. All right, this goes for stocks, this goes for ETFs, this goes for commodities. The confirmation signal can be used on every single chart out there as long as it has some volume to it. In the case of Bitcoin, you look in terms of dollars traded. So even if it only trades, let's say 10,000 coins a day or 5,000, it's still a lot of money trading. So, and people trade in small pieces of Bitcoin, like 0.1 Bitcoins anyways, which would be more likely what you would refer to as a share. All right, so that's what you have to keep in mind, folks, is that, again, right now, great bounce on Bitcoin. I'm curious, after the Tesla conference call today, do we see a pullback, or maybe Elon Musk juices it to where it breaks through 40 to 41,000? If it does, probabilities dictate you go to 50,000 here. If it doesn't break through and starts to trade down, you just assume you're in a trading range, all right, which is obviously between 30 and 40,000 here, which is where we've been for the last 3 months or so. The only thing that changes that trading range to the upside, a break above 40 to 41,000. To the downside, if you're going to see a drop, a big drop, it needs to confirm to the downside, and then it can go to the first level, which is here at 24,600 or so, and then really below 20,000. It's about 18,300 would be a very key level. Anything really what I'm going to do in terms of how I'm going to trade it is down the line in terms of picking up longer term holds on Bitcoin, because you guys know I'm a big bull that believes Bitcoin's going to head towards 100K, 500K. I just have to be clear that you still haven't seen the full deleveraging effect in the markets. There's too much liquidity. The Fed hasn't clamped down on that. Once you see deleveraging in the stock market, it's going to translate into more selling in Bitcoin and the cryptos and so forth. And in my opinion, that's where you head down below that level. Again, obviously with the stock market near all-time highs, you're not seeing that deleveraging just yet. Fed meeting on Wednesday, or at least we'll know their comments on Wednesday on their interest rate policy. So it'll be interesting to see what they end up saying. All right. But again, this is the very important keys to everything that we're watching here. And I want you guys to be fully aware of the chart and how it needs to be traded. So again, so many people are asking after today's move. And it's so funny because there were so many people that were so hardcore bearish when we were just down around that 30,000 level. Now it's doing a 180 to where they're, crazy bullish. Like, oh, here's the start. Now, to be clear, we're still in a corrective move, all right, on Bitcoin until you get down, until you go up and take out 65,000. And I want to be clear on that, folks. That is unbelievably important, right? So you have to look at Bitcoin in terms of, if it gets up to this level, Where does it change from a downtrend? Where is it? Because right now you're still in a corrective mode of Bitcoin. And the answer is it has to take out 65,000. Now, what's so funny to me is that if you go back to 2017 and you look at where you topped out, you had some major bounces. All right, major bounces on Bitcoin. I don't know if we can go back in the chart here. I don't think my chart goes back far enough. But if you go to any other chart on Bitcoin, what you can see very clearly is that you had some mega bounces. I mean, Bitcoin didn't drop from the 20,000 handle and go straight down to 3,000, right? We all know that, or at least I hope we do. And if you're unsure of that, please go back and look at the charts, right? Look at the charts, see exactly what the charts did. I can't stress that enough. In fact, let me show you here exactly what I'm talking about. And in fact, I'll bring up my screen here just to quickly go over this. Bear with me here as I show my screen again. All right, so here's just a chart from investing.com because it's an easy way to look. So this is the monthly chart on Bitcoin. We can go actually to the weekly because I think you'll see it better. But if you zoom out on the weekly chart on Bitcoin, right, here's 2017's high. You can see the correction here. And then look, you actually went from 4,000 all the way back to 13,000 before going all the way back down to basically 4,000 again. And if you look at even a closer chart here, and let me go back here, you can see that here you had a fall from basically 19,500 all the way straight. Basically, here was your first dip, right? Down to about 10,000, which you could almost make a case that that's replicating exactly what we're seeing, right? So look at this. So from, let's call it 20,000 down to 10,000. And then you bounced all the way back to 17,000 and change. Do you guys kind of recognize what I'm saying here? So you're looking at a Bitcoin chart recently. If we go back to the chart recently here, Bitcoin, and let me flip back to the daily chart. All right, Bitcoin was at 65,000. It went to 30,000. Just like in 2017 into 18, it went from 20 to 10. You see the 50% drop? And then it chopped around. And then here, remember in 2017, it went back to 17,000. So it almost went back to those all-time highs. In this case, it kind of makes sense that if it repeats that, it's going to go back to 50,000, which you'd be very close to the all-time highs again. So I guess this is my point, folks, is that, you can't let short-term moves whip you. You can't let your emotion get a hold of you. You have to kind of look at the facts. You want to refer to history. History is one of the greatest indicators of what will happen in the future. And the reason history generally repeats is because charts are representations of investors and their emotion, right? Buyers and sellers are emotional. People by human nature are emotional. So you're going to see the repeat of fear and greed. So just keep that in mind. All right. Now, again, could you play Bitcoin long if it gets above 40? Yeah, you probably could. But ultimately, I do think it's got to go to 20,000. If you look at the correction from 19,500 down to the lows there, that would be very representative, even a little bit lower to that 18,000 level of where it could go in percentages. All right. Now, a lot of people say this time's different. I've heard that many times before in my trading career. It's always different until it's not. All right. You guys have a wonderful rest of your day. Hope this update helps you. Have a good one. Take care.